Now, as we said, we have to make sure that we reconcile between our books, as we said, our cash book, together with what? Bank statement. Can you see the importance of learning the cash books from accounting 1A? Now we know how does CBRs look like. How does CBP look like? So we are going to reconcile the difference between the two. So we need to see that the amount received has been deposited at the bank. That's why at the end of the day we need to understand the difference between the adjusting and timing. Okay, so who can tell me what is the difference between the adjusting and timing difference in your own way? If I say differentiate between the adjusting and timing difference.
Adjustment is the error, and timing is.
Do you agree?
Apologies.
No problem.
Everybody for being late. Good morning.
Okay, Sonia, do you agree with Sonia? Because Sonia, okay, Sonia, can you please repeat yourself? Go ahead.
Okay, adjustment is any errors that took place. Timing is when it happens.
Please, someone support here or please disagree with me. And please don't refer to the book or not. No, I don't want the textbook next to you. We're going to refer there after that. Sorry. I want the independence.
I was saying timing, most of the time, obviously, if I make a deposit now, I want the bank closed tomorrow, it won't show the statement because maybe I was late before they close the bank.
For an EFT payment, right?
Yes.
Yes. This means from the bank side. Timing means in our books we have got those records, but they are not reflected yet on the bank. Like what you said, sometimes you deposit maybe a check. It takes what? Maybe how many days? 3 days to reflect. For timing, that amount is what? It's a timing. So next to the timing difference, just write outstanding items. All the outstanding items are referred to as what? Timing. Because they can, I know they like sometimes they give me a little bit of a theory there, just for maths, but sometimes we lose maths because of that, because I'm not ready for that. Okay. Say something about the adjusting. Because yes, we understand timing. We think about the bank statement, not yet reflected on the bank statement. What about the adjusting?
If the bank made an error on the
It could also be that your books and your bank statements doesn't correspond to the error happens on your book side.
Yes, can you see the error is two-way, like she said. So error can be both sides. But the adjusting means are those items or amounts which are reflected on the bank statement, but not yet in our cash books. Like when you pay Varsity College, you don't call them and say, I'm paying you. What do? You just pay. They can only be aware when they see what? Bank statement. So meaning we need to come and adjust our books. Does that make sense? So the outstanding items, as I said, they are what? Timing. They appear in our books, not yet on the bank statement. But adjusting, they appear on the not yet in our. Please get that. If you can get it. Okay, let me start with this one now. When I say adjusting difference, it means there are those amounts which are reflected on what? But not yet in our. For example, you pay Varsity College via EFT. At the moment, Varsity College is not aware. But when they extract their bank statement, they realize that one of the students paid them 5,000. Where do they see that? Meaning they must come and update their books. What is that? Adjusting difference.
So it can mean similar to the timing when you pay and it doesn't reflect on the bank statement, like.
Stop there. I want to stop this so that I can explain from that.
Okay.
You said you paid, but not yet on the. They need to say not yet on the bank statement.
It's timing.
It's timing.
When it's in the bank statement, but you haven't seen yet, then it's adjustment.
Yes, remember on the bank statement means you were not aware. And you must come and show that you received that cash. Or maybe you paid that cash. Think about the debit ones. Think about the bank charges. Do they call you and say, we are charging you? No. But remember, the minute they charge you, you must come and show in your books that you incurred that expense. So by recording in your books, you are by recording on the bank record. Bank record represents what? Bank statement. It means you have, but it will make sense with what? The practical exercise. Does that make sense? Guys, I don't want to waste time on this one. This can still be answered on the question, okay? I wish you can have 6 hours to do it. But it's good to understand because I believe in accounting. You can't just memorize. You're going to be stressed, I'm telling you. Okay, can I continue, guys? No problem. Please, you can still ask me after. I just want to talk about examples of adjusting. Things which, okay. What are the adjusting differences? Where do they appear? On the bank statement? Not yet? So these are the examples of things that you can see on the bank statement. So bank charges, interest on current accounts, interest on overdraft, debit orders, direct deposits like in the form of EFT. Okay? Dishonored checks, sometimes you deposit a check. Unfortunately, the bank will return it. We call it what? These are just examples of adjusting, meaning they appeared on the bank statement, but not yet in our books. But depending on the nature, we'll either record in the CBR or CBP. Just for example, where am I going to record this one? CBR or CBP? CBP. Because debit orders, you don't receive them, guys. You pay by debit order. Just imagine you've got debit order of 5,000, you celebrate. So, don't worry, we'll take an exercise for that. But for now, just know that those are examples of what? Adjusting. You can find more. Because sometimes somebody pays you a rent, via what? EFT. So you can still come here. On what? Adjusting, CBR or CBP. Are we okay for now? Remember, you can still ask a question. Examples of what? Timing, please. This one is a type. I think when I forgot to edit. Just take out this one. If you have the notes, I'll edit that from my notes. Okay. This one must be out. It must be under adjusting because we're cancelling what? A check. So for now, ignore this one. Under timing, as I said, you must see that they are the same as what? Outstanding. So any outstanding items, meaning they are appearing in our books, but not yet on them. So what must we do? You must go and record them under bank reconciliation statement. Guys, the reason why I didn't give those notes because they're on VC then. Yeah, so don't worry. But for now, remember, it's just theory for now. But please ignore this one. I think I forgot to cancel that one. This one must go under what? The adjusting one. Yes, but I'll show you with an exercise. So I'm not going to waste time, guys, to go on this theory because I'm still going to take an exercise and I want us to do a lot. Any questions so far? Feel like you're going somewhere? That 90% that you promised is there? Okay, let me not put you under pressure. The problems always come with what?
So you say self-checks goes to adjustment? Yes,
under adjustment. And to be specific, under CBR. You know why? What is a stale check? If I may ask.
Return check.
Not return check.
Oh, actually, the check expires in 6 months.
We say 6 months old. So if I give you a check and you keep it for 6 months, the bank won't give you the money. It means it must be cancelled. Can you see when we cancel a check? It's like we're getting cash back. So that's why I'm going to put it in the CBR for time being till we issue a new. I don't know in the banking sector, do you still use 6 months?
No, we use check.
Okay. But we use 6 months, and sometimes they don't tell you that a check is a stale, guys. So in the exam, when you see a date next to the check, you must be suspicious. Start counting from the date of that check till the month of your reconciliation. If you find what? It means that check is what? Stale. Where must you record it? CBI. That will take an exercise for it. Are we together? Got it? No, it's always, sister foundation. Guys, as I said, the problems always come with what? But errors are problems, eh? That's what I'm saying. So, when you find an error, you need to ask yourself, between us as the business and the bank like ABSA, who made the error? Obviously, if ABSA made an error, you're going to see it on the bank statement. But if we made errors, we're going to see those errors in our cash books. So the first thing to do is to identify the error, know who made the error between us and the bank. Did you get it? Depending on the nature of the error, you will know where to record. For example, if an error has been found on the bank statement, it means the bank made an error can only be rectified under bank reconciliation statement. Write it down. Still gonna remind you, don't worry, we still have days together here. Did you hear that? Can I repeat what I said? Errors made by the bank can only be corrected on the bank reconciliation statement. Are we together? But what about the errors which have been made by us? When I say us, meaning our own accountants or bookkeepers can make errors. Obviously, those errors must be rectified in our books, in one of those cash books, depending on the nature of the error. So for now, I just want you to know where to record the error. Error made by us in our cash books, they must be rectified in the cash books. Errors made by the bank on the bank statement, they must be made on bank record. That is important. And then in the exam, they always say errors they won't forget, because otherwise you're going to get 100. Okay. Yes.
I just want to check if it is CBR.
It's CDP. Yes. Why? What can you say about it?
Because it hasn't gone out, so you need to bring it back in.
Yes. For example, this owner check is like your clients are paying you using the check. Can you see in business when you give me the check, I must go and say that I received, I record as a receipt. But when it bounces, they normally say it bounces or it is returned by the bank, we need to reverse it. It's like a payment, we're just setting up the amount. So this owner checks must always be in the CBP. Okay. Any question? It's good. No theory is important. So it depends. These are kind of errors that we can find. So one each. This one. Now, I think you all can agree with this. Sometimes you overstate, sometimes you understate. But the challenge is just know how to record. Just for example, let me just give you an example. Let's say you record it in your cash book receipt. Okay? You recorded 500. Just write it down for me. I want you to make it practical. Your CBR amount is 500. Write it down. And it is incorrect. Write incorrect next to it. CBR 500, incorrect. At the bottom right, correct amount 600. Obviously, you see an error there because I said a correct amount is what? Incorrect is how much? So in our CBR, we have got an incorrect figure. So meaning who made the error between us and the bank? Us, because the error is appearing in our books. So, but who can tell me, are we going to record 600 or the difference? Of how much? 100. The challenge is you need to know in which book are you going to record that difference. The CBR. The rule says if you understated an amount in the cash books, the difference must be recorded in the same book where you understated. Did you get me? So you're going to go to CBR. It makes sense. You must make it 600. So you must go and put what? 100 rand under what? CBR. Did you get that?
If you go the other way around, would you have put the difference on CPP?
Yes.
Okay.
The other one, let's say for example now, let's put another one there. CBR, write it down. Separate thing. Don't feel bored, guys. I know they're easy. I'm just saying. Let's say no, CBR again, aside. The amount is 700. Incorrect. Right at the bottom, the correct amount is 400. Did we overstate or understate? Overstate. Are we going to record 400 or the difference? The difference. Where are we going to record the difference? In the opposite book. Because it's CBR, the difference must go to CBP. In a nutshell, I'm trying to say, if the amount in the cash books is overstated, the difference must always be recorded in the opposite book. So if you overstate under CBR, the difference must go to CBP. If you overstate it under CBP, the difference goes to what? It's like you are trying to reverse. In those days, they used to go and just correct, put a line, cancel, and in those days, I don't know those days, I was not there. But yeah, I know. Those old books, they are very rare to find. You can just see they scratched, they wrote a new amount. These days, we set off. We record under the other book to cancel the other amount. It's like SARS. How can you cancel output? You record in the input. Okay. It's like, did you get that? So again, we're going to talk more about this when we take an exercise. Let me not waste time. I can see that you can't wait. As I said, this is just what we are trying to do, to make sure that our own books correspond with the bank statement. Guys, if our systems were linked to the bank systems, there was no need for reconciliation. Because the minute I receive, the bank will update automatically. So our systems are not linked. Sometimes what is happening from the bank side, we don't know. We can only be aware thereafter. That's why we've got what we call temporary difference. All of them, I call them what? Temporary difference. It's like you in your own lives. I think some of you are lucky enough, last night you had differences, but you reconciled. I think it's practical to you at the moment. Okay, I'm just saying. So it means we put our differences aside and we. Why? Because we believe in the near future, it can be tomorrow. Things will be okay. The same applies to what? Yes, we know that they are outstanding, but tomorrow cannot be. Let me not talk too much.